After Sunday's historic referendum that effectively puts us in territory we haven't been in before, now Eurogroup finance ministers are expecting new proposals from Greece. Of course, the question at this point is, will we still have more of the same? Obfuscation, a lack of agreement and a complete lack of will to move forward? Or will we finally have a deal on the table? And of course, at the end of the day, what effect will that have on African economies and currencies? We'll be asking those questions right here on Global Business tonight. Welcome to the program. Here's what's coming up. A global glut in sugar supply threatens to cripple the industry in Uganda. And a unique mall is opening up in South Africa. It's catering for upcoming entrepreneurs. We'll have the details. Let's start in South Africa. The country's gold sector is bracing itself. All four unions have rejected the 5-year wage deal offer put on the table by the Chamber of Mines. Now, they've entered the third week of talks, and the parties are no closer to finding common ground now as they were at the start. Angelo Coppola has the details.
The union's response was to be expected, as this is only the beginning of the process.
Real disappointment that today when the unions came back, they did not really engage us on the economic and social sustainability compact. We made very good offers last week, all underpinned by sustainability and job security. There was no reference to that, no recognition of that. It was a purely going back towards positional bargaining.
Well, we stick to our positions mainly because they haven't made a single move. Now we were here to negotiate. We won't stand where we were at the beginning of the negotiations, provided they open up and move a bit.
The unions are taking a firm position. It appears, though, that AMCO has learned some lessons from the 2014 platinum strike, though.
No, we cannot negotiate indefinitely. We can't. There has to come a time where we say, no, enough is enough. Then we look at other options that we have in terms of labor and so on. So we are not going to engage here endlessly.
Another union suggests that time is running out.
If we don't have a solution by next week Friday, we're either in a dispute or we can agree to extend the negotiations. But at this stage, it's very likely that one or maybe two of the unions will decide this week that we are wasting our time, that we will declare a dispute and rather go through the dispute process in it. So the chamber needs to come with a very positive response.
We still think we have made very good proposal around this agreement and around the issue of sustainability and job security, and we would still want to pursue it with the unions.
Seems that all the unions are very keen on getting this wage negotiation round sorted out and finalized, and it seems that they're not scared to take it to the next level. Whether the Chamber of Mines will react positively or not remains to be seen. I'm Angelo Coppola for CCTV on the East Rand of Johannesburg.
Now, global markets have been shaken following Greece's decision to reject austerity measures proposed to her by her creditors. But for now, it seems any major fallout is largely contained. Over 60 Greek voters voted on Sunday to reject Europe's latest bailout offer in Sunday's referendum. Now, there are fears that this could lead to Greece becoming the first country to leave the euro. And that's a conclusion that some think is all but inevitable at this point. Euro area leaders are set to meet in Brussels to try and broker a new deal this week. After Sunday's referendum, the euro was down by 4/10 against the greenback. Japan's Nikkei was down by over 2%. US equity futures, they shed 7/10 as well. Chinese stocks, however, were up, but that was for an entirely different set of reasons. Support measures coming through from Beijing. Markets, however, did respond rather favorably to news that Greece's former finance minister, Yanis Varoufakis, has resigned. He's clashed several times publicly with the Eurozone finance ministers over the last 6 months. Now, all this uncertainty in Europe has had quite the effect on African economies, as demonstrated by the considerable amount of capital that's been flowing out of capital markets over here. Many international investors have been spooked by the potential turmoil a Grexit would cause, and they're responding by moving away from riskier markets into traditional safe haven assets.
As news of Greece's decision to reject austerity measures reverberated throughout the globe, the effects were soon felt in Africa's most advanced economy, South Africa. The Eurozone is the nation's largest export destination. South African stocks and the rand fell as investors looked for safer options amid the market uncertainty. The currency slid as much as 1% to a 2-week low against the dollar before recovering somewhat. The US dollar has recorded substantial gains due to the euro uncertainty, which combined with domestic African economic issues has seen many African currencies drop against the greenback. Kenya's shilling weakened to a 3.5-year low, hitting the 100 level against the dollar for the first time since 2011. Amid concerns of a widening current account deficit and the stronger dollar globally. Meanwhile, Nigeria's economy continues to take a battering, with the naira quoted at a record low to the dollar. The central bank has been curbing access to the dollar for importers, shifting demand for hard currency to the black market. The news gets even worse for Africa's largest economy, with oil prices falling sharply due to the high American dollar making trade more expensive for holders of other currencies. As a net crude exporter, Nigeria's foreign reserves have already been decimated since last year's global downturn in oil prices. Egypt's stock market also fell sharply, but that was mainly due to concerns over foreign exchange shortages, security issues and the central bank's decision to let currency resume depreciating. So with uncertainty in Europe set to continue, African markets are likely to feel the flow-on effects for some time to come. Andrew Thompson, CCTV.
And you can see some of the numbers that we're looking at in the markets are essentially reflecting that volatility and the side effects we're seeing right across the board. Quick run through the Kenyan markets, however, fairly interesting developments coming through there. Most of the trading today, in fact, over 70% of the shares traded are concentrated just in Kenyan banks. And it's not hard to see why when you've got a return on equity of 27%, give or take a couple of percentage points on either side. Pre-tax profits for the entire sector, 141 billion Kenyan shillings. And all of that is driven primarily by the high interest rates that these banks are currently enjoying. Coming up next will be in Nigeria, a fuel shortage looms large. We'll tell you why. And over in Uganda, a global glut in sugar supplies threatening to cripple the industry in Uganda. We're back in 60. You're on Global Business. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Global Business, weekdays at this time on CCTV Africa.
Effects of the austerity measures are evident and were expected. Egyptians, however, seem to be patient about it. But El-Sisi told government he wants to control the prices promptly before people's patience runs out.
Right, and welcome back to the program. Later on in July, the American president will be in Kenya for the annual Global Entrepreneurship Summit. That event is being held in sub-Saharan Africa for the first time ever. It aims to connect entrepreneurs with leaders from business, international organizations and governments as well. Our Washington correspondent Daniel Rangers spoke to Penny Pritzker, one of America's most successful entrepreneurs. She's currently the American Commerce Secretary and will be accompanying President Obama to the summit on the 25th and the 26th of July.
Having the Global Entrepreneurship Summit in sub-Saharan Africa is really an exciting extension of President Obama's vision that entrepreneurship can be not only a source of economic growth, but also a source of political stability.
Now, a huge amount of private sector funding is going into Africa, much more than foreign aid. Much of it, though, I think goes into the pockets of people who've already got money. If you look at World Bank figures, it shows that there is still a vast population in Africa that has nothing and will not benefit from this.
You know, I was in Ghana with one of our president's ambassadors for global entrepreneurship, Nina Vaca, last year. And we went to an incubator called Meltwater. It was so amazing to see young people creating new businesses with the support of this incubator and accelerator. So I think that we have to, yes, there's problems, but I think we have to look at where the pockets of growth and opportunity are and build on that. And that's what the Global Entrepreneurship Summit is about.
African Growth and Opportunity Act has just passed the Congress.
Yes.
Does this give some momentum? And are you going to be recommending that people try much more to benefit from this, because the energy sector has always been the vast majority of the trade through AGOA?
Absolutely, and this is a significant part of AGOA in its next iteration, is that we really work with the business communities beyond just the oil sector to take advantage of AGOA to sell more products into the United States so that they can help their industries develop.
Now, one of the big problems is the tax base in some of these African countries is minimal. US corporations, multinational corporations, have been accused of avoiding tax in the countries in which they operate. Is this an issue that you'll be pushing on?
Well, I think that all countries need to think about their tax regime to make sure that they're collecting a fair tax, and also that they're collecting tax on all those who owe taxes. That's a challenge not just in Africa, but is a challenge in many countries around the world. So we have programs where we work to do technical advising with different countries on that issue.
So what's your main message then to people who may not have the confidence to come forward to this summit and really make the most of it? How do they engage in a way that will ultimately benefit their future and those of their families?
Well, you know, one of the biggest challenges in many countries is the culture doesn't support entrepreneurship. I've met entrepreneurs in different parts of Africa who are afraid to tell their parents that they're starting a company because failure is not an option in their culture. So one of the most important things I think we need to do is help countries and individuals and the society accept the idea of failure. We have to make it easier to start a business, but also if a business doesn't work, to close it down and do something else. That's something we do well in this country, and it's why risk-taking is something that's accepted and almost revered here in the United States. We want to work with other countries so that they have the laws and the structure to support risk-taking, which is ultimately what entrepreneurship is.
Right, then let's revisit our earlier story. Athens, of course, and its stunning rejection for some of the terms laid out in the bailout by Eurogroup creditors. Let's relay in. Guy Henderson is live in Frankfurt. Kate Parkinson, of course, is in Athens. Guy, between the no vote and Mr. Varoufakis' resignation, have German attitudes toward debt restructuring and debt relief softened in any way?
Well, just before I answer that question, just to bring you the latest developments here from the European Central Bank in Frankfurt, which is behind me. The ECB has released a statement to confirm that it will be extending its emergency funding to Greek banks, which of course at the moment are completely relying on the ECB in order to keep them afloat. But from what we understand, that liquidity will not be increased, which is what the National Bank of Greece had requested on the Sunday. The ECB is also saying that it will be adjusting collateral, which could, on those emergency loans, which could potentially make it more expensive for Greek banks to borrow money. But we're not sure yet what exactly that means, but certainly not exactly what the Greek government were looking for. Briefly, in answer to your question, the answer is no. Angela Merkel, the German Chancellor, has just given a press conference in the last half hour or so in Paris with François Hollande, the French president, and she has simply referred to the last offer made by creditors, which did not include a debt haircut. That is something that we understand the Greeks are insisting on. Reportedly, a 30% debt haircut is what they're looking for.
Kate, coming to you in Athens, what does the Prime Minister, Alexis Tsipras, what does he gain by not having Yanis Varoufakis as part of his team as finance minister? I understand he's already been replaced, but walk us through what this means for the negotiations that will take place between Greece and her creditors.
Well,
well, frankly, more chance of getting a deal. At least that's the hope. Yanis Varoufakis was incredibly provocative character. He was deeply disliked by a lot of Eurogroup leaders. He had a particularly difficult relationship with the German finance minister, and so his removal is certainly a gesture of sorts by the Greek government, that they are willing to make some compromises. The former finance minister said himself in a statement on his personal blog that he was aware that a number of members of the Eurogroup did not want him in the meetings. They would prefer it if he was absent, and that was why he was stepping down, because it was felt that that would be helpful for Prime Minister Alexis Tsipras. He added that he would wear the creditors' loathing with pride.
Indeed, we'll leave it there for the time being. Thank you both for your update. Guy Henderson live in Frankfurt, and of course Kate Parkinson live in Athens. Worth pointing out, of course, that Ms. Christine Lagarde, the IMF Managing Director, did release a statement earlier today. Quote, the IMF has taken note of yesterday's referendum held in Greece. We are monitoring the situation closely and stand ready to assist Greece if requested to do so. Exactly what that will translate to in talks, of course, is a completely different matter altogether. Let's move on to Nigeria. The country might be in for another crippling fuel crisis after black market traders, tipped off by petrol attendants, alleged that the petrol tankers are not loading fuel. And that essentially is a signal that this crisis is far from over. And this comes despite reports that fuel wholesalers reached a deal with the government in May after talks between the former finance minister and the Independent Petroleum Marketers Association. At the heart of this shortage has been a row over the payment to wholesalers of the difference between the subsidized pump price and the international market price. Now, the wholesalers say they are waiting for a $1 billion payout from the government, though a committee will now be set up to verify that $1 billion figure and then pay the outstanding money. The government is yet to confirm those details. On to Lagos now. Dolapo Oni is the head of energy research at Ecobank. He's live in Lagos tonight with more details. Thank you for your time. Months after his inauguration, why has President Buhari not yet appointed a cabinet? I mean, doesn't this leadership vacuum compromise efforts to reform the oil sector and, of course, deal with crises like this incoming fuel shortage?
Well, thank you for having me on your show. And I mean, there's just two major reasons I can point to why we don't have a cabinet yet. The number one reason is the fact that the transition committee that was set up to essentially prepare all the information that will be required by the new government and process it from all the various ministries and agencies of government didn't complete its task until last week. They were also supposed to also review the handover note that was prepared by the last government and give recommendations to the current president. So they just completed their task, and they've started having some sort of deliberations with the president and his team, and we're expecting a cabinet to come up. But another second reason why we've also not seen the cabinet is really because of some political squabbles that we've also seen within the ruling party. There's been several crisis meetings, reconciliatory meetings, just trying to put all the parties together on the same boat, just to ensure that the cabinet can get up and running. Don't forget, Nigeria has about 36 ministries that typically get filled by the new president. And that is, so there are several interests that need to go into which states will provide those ministers and all that. So putting all that together has sort of made that a bit of a difficult process. But will that affect the oil sector? I think one critical step that the president is also taking might make this work, in the sense that he's trying to give more power to the permanent secretaries. The permanent secretaries respond as really at the next line of command after the ministers. So he's trying to empower them more to make more decisions. They have a career, they are civil servants, they've been in the industry for long, and so they understand a bit of the technicalities of running the sectors.
Indeed. The outgoing administration, led by Goodluck Jonathan, only partially resolved the arrears due to fuel retailers. But given the fact that there's a lot less revenue to deal with for the Buhari administration, how are they going to settle the dues owed to these companies?
Yeah, I think the obvious option would be to actually raise more debt. I mean, practically looking at what is available in terms of revenues, in terms of government funds, and there are efforts to try and quickly recover funds that haven't been looted, funds that have been misspent, and so on. But I think the real practical step, which we will see likely, will be that the government would have to raise some debt, and is likely going to be more local than international at this time, to try and cover up those payments.
Indeed, given the fuel shortages and this row between retailers and the government, is this perhaps the final thing that will push Nigeria's governments to finally remove fuel subsidies, the politics be damned?
Yeah, you know, I mean, just to add a little more context to that, if you're following the development, even this morning, the petroleum marketers have also raised the figure even. I mean, last week we were talking about some 250 billion naira, roughly about $1 billion or $1.2 billion. But this morning they were talking about 300 billion naira, roughly about $1.5 billion. So because they're talking about the interest payments that also have been accruing on those debts if they've not been paid, and I think it could just be the final straw. Again, when you look at the president himself, Buhari, who's been a former petroleum minister of Nigeria, who's been a former chairman of the Petroleum Trust Fund, he has quite some connections with the industry, so he understands a bit about the industry. He's not a fan of the subsidy regime. During his tenure, previously, he used to run, we had more of the oil processing agreements where the crude was processed in foreign refineries and brought back and distributed to the marketers, so there was no need for subsidies. That's a system he's likely to consider bringing back, which will essentially replace the subsidy regime and take it out of the system.
Indeed. We'll leave it there for the time being. Thank you for your input. That's Dolapo Oni, who's the head of energy research at EcoBank. You can follow him on Twitter at Dolapo as well. Now, let's move on to more commodities. African sugar producers, they're struggling to cope with a glut in global supplies that has pushed the price they can get for that produce a lot lower. Uganda's sugar industry is no exception. It's now grappling with an unsustainable level of stockpiles, which producers are yet to find buyers for. As Michael Baleka reports, the issue has been made even worse by an unfavorable regional tax regime that limits or completely blocks exports into markets like Kenya.
The first line in the sugar-making process, the cane slowly makes its way to the grinder. This mill, run by the Madivani Group, makes close to half the sugar produced in Uganda. But the factory may have to cut down on production. It is struggling to sell off accumulated stock meant for export.
We have a surplus in Uganda. Right now our company has around 50,000 tons of sugar, which is a lot of sugar. And I'm sure the other millers are also collecting sugar, which should be for the export market and the regional market generally.
Sugar industry experts say prices on the global market have fallen sharply over the last few years due to oversupply. This has resulted in countries like Kenya importing large amounts of subsidized sugar from places like Brazil and India, instead of taking it from neighboring countries.
It affects us, first of all, they import excess sugar than they consume. It takes over that market of ours in Zaire, in Burundi, where we would access.
Uganda says Rwanda and Kenya have also put in place unfavorable tax regimes in an effort to protect their domestic industries against competition. Uganda consumes about 350,000 tons of sugar every year. With consumption growing, the industry aims to expand production to over 700,000 tons by 2030. But the trade impasse, coupled with ongoing conflicts in South Sudan and the DR Congo, could force local mills to cut production. Those in the industry are worried that trade disparities could also affect farmers' incomes.
If you look at the market, it's huge. It's not just only Kenya and Uganda. There's Rwanda, there's Burundi, there's Tanzania, then there is Southern Sudan. So I think the future looks bright, but we need to get the formalities sorted out so that people can move goods as well as move people between the countries. You know, that is the only way forward.
The Madivani Group is planning to set up an additional sugar mill in northern Uganda, but the investment is likely to be delayed following the global downturn in the sugar industry. Michael Baleka, CCTV, Kampala.
Right, then a quick run through commodity prices here for you. Of course, the effects of Sunday's vote coming through into these commodities as well. Brent crude finally dropping under $60 a barrel. Tanzania, incidentally, passed a petroleum bill. Interesting royalties coming through in that particular piece of legislation. Onshore royalties, 12.5%. Offshore, 7.5%. That's relatively lower than what's charged in Nigeria. We'll be in South Africa looking at an architectural story next. A unique mall has opened up catering for young entrepreneurs. Welcome back. A shopping mall built out of shipping containers in Joburg's Bohemian area of Melville has proven to be quite the hit with retailers and consumers. The 27 Boxes development, as it's called, has transformed a once derelict park into one of the city's trendiest retail locations. At the same time, it's giving young entrepreneurs an opportunity to showcase their wares.
Occupying 2,600 square meters, this unique shopping mall is the latest example of a craze that is sweeping the world. The mall is constructed from shipping containers, 27 of them, hence the name 27 Boxes. The project fits perfectly within the vibrant, trendy and bohemian character of the neighborhood.
It doesn't even feel like a shipping container. I'm sure you've seen some of the other shops as well. I mean, it just helps you to use your imagination. Like, you probably see the crates on the wall, and it's been one of the big things to see how people have been intuitive, you know, and doing new things or recreating and upcycling. So it's been really cool. I mean, 27 Boxes is one of the first here in South Africa currently. We've got a lot of foot, you know, lots of people visiting, checking the place out and so forth. So it's been really cool.
The mall was inspired by London's Box Park, which first opened its doors in 2011 as a pop-up mall also using shipping containers.
The container experience has been amazing. I have amazing neighbors. All the other shops are great. They have amazing products. So just loving the whole experience. It's so much better because it's not, you know, your chain stores. It's like people hustling as you are. So you feel like you can connect with them and you have a relationship and you're all on the same level. And it's a family environment, which makes it such a wonderful experience. And I love coming here every day.
The $2.4 million complex boasts 102 stores, each with an average of 27 square meters of space, appealing to entrepreneurs who can't afford the hefty fees in more traditional shopping malls.
It's pretty cool because the space is small enough, so it still feels intimate, but it also gives us a taste of having a shop because it's small, so it's a good start for us.
The first of its kind in South Africa, 27 Boxes features microbreweries, restaurants, a coffee shop and a boutique garden center, all aimed at attracting the area's young and trendy market demographic. Ucheo Koronkwa, CCTV Africa.
Right then, currencies. The Kenyan shilling, of course, provoking quite a bit of hue and cry, crossing that psychologically important 100 shillings to the dollar mark. The Monetary Policy Committee meet tomorrow. We'll have the details on their deliberations, what data they took into account, and the policies that come out of that meeting later on, right here on this program. But that's it for this edition of Global Business Africa. As always, we welcome your views, opinions, and story ideas. Send it all to Global Business Africa at cctv.com. As always, the news continues on Facebook and on Twitter. I'll see you over there and in 23 hours. Thank you for watching.